Okay, that's fine.
That's you, Brian. Apologies about that.
Okay, sorry about that, lads. Good morning. My name is Brian Murphy. I'm the head of credit here in St. Paul's Garda Credit Union. Look, I've been head of credit here for the last 4 years. And when I was asked to make this presentation by Wellington, I was very conscious that we're an industrial credit union where we have different issues with regard to membership and how we attract in our members and so on, and how we advertise ourselves. But I would have spent over 34 years with Permanent TSB in branch banking, so community credit union type scenario would have been what I was used to, so I understand the challenges that we have out there. But I'm making the presentation based on what we've done in St. Paul's. I'm just very conscious that a lot of the stuff that we've done here, a lot of you are probably doing already, and you've probably been doing it for years. So just this is our journey. This is what we've done, and this is what we're looking to try and drive our business. Like every other financial institution, I suppose, with regard to COVID-19, we were affected by the pandemic with regard to our loan numbers and our loan book. So our loan book dropped, our loan numbers most certainly dropped, and we're starting to see that we're getting back our loan numbers back to where we were pre-pandemic over the last couple of months maybe. And our loan book is certainly coming back and has come back ahead of where we were. So, but we've done a lot of work in the meantime to try and drive our business. The pandemic, I suppose, allowed us an opportunity to sit back and review what we're doing. We're all very, very busy, and we all have ideas and plans about what we want to do. But sometimes we just don't get around to doing it because we just haven't got the time. So if there was a benefit to the COVID-19, it forced us to kind of sit back and take stock of where we were at. So before we looked at our business, we wanted to make sure that we had two areas that we wanted to try and get business from: new members, but also our existing membership. So we had a high percentage of members who had never borrowed from St. Paul's. So we would want to look at that as well. When we wanted to try and drive our business forward and see what we're going to do, we asked ourselves a number of questions, right? But like, is this in the best interest of both St. Paul's and the member? So this is purely member focused, but it must make sense for the member. Is this sustainable into the future? So we didn't just want to look at our existing book and tackle that and try and get business from existing people. We wanted to put a plan in place that we could drive ourselves forward, get new business from new members. So it was an overall approach. So it must be sustainable into the future. And does what we're going to do fit in with the risk appetite set out by the board? So they were the key things that we asked ourselves.
Hi, Brian. You seem to be on mute again. Do you have maybe a mic?
Is that okay?
Oh, there we go. You're back. You're back. Oh no, you're muted again.
Is that okay?
Yeah, that's you.
So COVID-19, the problem I'm having though, is that when I unmute myself, I'm losing my screens to kind of go down the slides. Can you put the slides up?
I certainly can, yes.
Yeah, because every time I go into the slides. Can you hear me there now?
Yeah, I can hear you perfect.
Okay, so look, disadvantage of COVID-19 obviously was that we had a major drop in our loan book, a big drop in our loan book. So the advantages that we saw was that it's a time to review our lending products and, more importantly, our processes. So we took the view that we need to improve our digital channels, our online loan applications, and our member onboarding. They were hugely important to us. As we said earlier, that our new members really, our common bond is guards. So whether it is a guard, retired guard, or a staff member inside a local Garda station, and obviously their family then can join through them being the bondholder. We don't have the ability for someone who lives locally or someone who is working in the local area to actually come into us. So we're limited enough in how we can market our business to try and attract in new members. So we took the view that the new people, the new guards who are coming in, will they want to deal with us with regard to lending the way we've dealt with our existing members in the past? Maybe they might, but they will certainly want to be more into the online space. So we took the view that our lending was going very, very well pre-COVID. It was probably going to be okay in the short and medium term, but going forward in the long term, it was not going to be sustainable. So we had to move to more a digital system and member onboarding. So that's what we looked at. So we're going to focus, I suppose, that we focus on these 5 key areas. We said we need to go online for our new members, mortgages, current accounts. We looked at marketing, which I suppose brings the whole thing together, and then automation, which is part of the whole thing as well. So we looked at those 5 key areas. Just to give a brief outline of why we needed to change, I suppose, like 95% of our loan applications were done over the phone, and about 5% were people walking in onto the counter. Now that's a huge difference to what a National Community Credit Union would face. Like that, these members would be nationwide. They'll ring up, make an application. It's a very much a manual application, and it's a very much a manual underwriting process. You know, there's an awful lot of paper was involved in it. Printing of applications, posting them to the members. There was significant cost to us, but there was also a significant cost to the member. The member had to go and post the applications back to us as well. So we need to look for additional business. So we were saying that, look, when we talked to members on the phone, they were on the phone for way too long making an application. Our process was just too cumbersome. So we wanted to reduce that. So when the member was on the phone with us, if we can reduce that application time, it allows us more time then to talk to them about additional business. Our members will talk to us and they'll tell us about their sons and daughters who have got their first job and whatever. And we never picked up on that information about asking for additional business. They also told us that they had loans with AIB or Bank of Ireland, and we never took up on that because we were so busy getting to the next application and we hadn't time to think. But now, by streamlining our application process and moving a significant amount of our applications online, our staff now have time, and so is the member, in which to have a proper chat, a meaningful chat about looking for additional business. We're starting to see that working. We then have brought in a new CRM system through SharePoint. That's only come in the last maybe 2 months. That's very much a work in progress. We know it works, but it's something that we're going to have into the future, where we can record a lead that a member gives us a bit of information. They may want to change their car in 6 months and so on. So we'll be recording those leads and then we'll get back to them when the time comes. So that's something that we've just brought in lately, and that should pay dividends to us going into the future. We needed to reduce the time frame from application to loan issue. So when we were doing all our paper applications, it was at best we got the loan application posted to the member on the same day, but generally it was at least 1 or 2 days later. So by the time the member got the application, put their information with it, submitted it back to us, they didn't get their loan for a week to 10 days. Now, that's probably okay with our existing members because that's what they were doing and they were used to it and they were quite happy to ring us for a chat about different things. Our newer members, that wasn't going to last. That wasn't going to be what they want, and we need to move with the times. So we said we need to provide members with a modern online loan application service, which we have done. We want to provide members with a secure loan supporting document uploading service. So when the member submits their application and they submit the documentation, their information is automatically scanned to their accountant sign. So that saves us then scanning, because when we got in the paper application before, we had to scan all the stuff on, which is very time consuming. And we want to provide members with an online e-signature service where they can sign their ECU form and credit agreements online. So we launched online loans in October 2020, which obviously was in the height of the pandemic. We spent a lot of time in 2020 with Wellington, there was a lot of interaction about fine-tuning the process. Wellington had a process that was good, but we needed to change a lot of it, or bits of it, just to make it more user-friendly, and how we could work in the kind of real world, I suppose, really. So when we launched, we were on about 35% of our loan applications were done online when we launched it. Bearing in mind, when we went live in 2020, our loan application numbers were a good bit behind where they had been in the past. So 35% of a kind of a lower figure. As we're speaking today, about 45% of our loans are now done online, and we're back up to pre-pandemic loan application numbers. So it's a significant improvement to how we interact with our members for online loans. So about 45% of our loans every month are now done online, which is great. It's an end-to-end service where the member will submit their application online through their phone on the app or through their laptop. They will upload their documents. We will approve the loan for them, and they will sign their eco insurance and their credit agreement online through digital signatures. There's no scanning, no posting, nothing like that, and they have the money back within 24 hours. We're finding now that instead of giving members money within 5 to 10 working days, we're now starting to see that within 24 hours, the vast majority of our applications, once they submit their documentations on time, the vast majority are getting the money within 24 hours, are getting the approval within 24 hours, and a good percentage of those, the money is in their bank account within 24 hours. That's a huge improvement to where we were. So we're finding that about 50% of all first-time borrowers with St. Paul's are now using online. So of those who are coming to us for the first time, 50% of them use online. So they want something that's different. Okay, so in the past 6 months, about 13% of all online loans that were issued were first-time borrowers. So the people. We haven't done analysis yet, and we are looking at that. Is that, are these people who were existing borrowers but just had never borrowed from us, or are they people who are new members and they just want to use technology? We're working on that at the moment, but it's still 13% of all our online loans were to first-time borrowers. So this is helping us in a huge way. How do we promote the online process? We actually do it through the website. We have a section on the website for online loans. We have a pop-up message that comes up informing the member that they can apply for their loan online. They can do it through, we do it through social media, and we do it through eZine magazine, which I'll come back to later, because the eZine magazine has been a huge benefit to us, and it's going to come out in other sections as well. So I'll talk about that later on. When we started this presentation, what we said was that this has to be for the benefit of St. Paul's and the member. So we don't want to become like the bank. We've all seen in over the last couple of days with regard to the AIB looking to go cashless and so on, and the bad publicity. We don't want to alienate our members. So this is not to replace the application that we do over the phone, or that we do when someone actually walks into the counter for an application. It's an additional service. So it's not, you must do online. It's not the case. We want to make sure that whoever wants to do a postal application, whoever wants to call into the counter, we will deal with them in exactly the same way, in a better way actually, because we'll be taking less time on the phone with them and having more meaningful conversations with them about looking for additional business, or looking for them to get their family or family to join, their sons and daughters and so on. But it's a service. It's not to replace. Anything else. It is going extremely well, the online loans for us though. So we're seeing a significant increase in our business, and I think online loans has made a massive difference to us. What we're seeing is that when a member applies through a mobile device, download the app. It's a bit more hit and miss if they use their phone logging onto the website. Yes, the applications will come through, but the app is definitely the way to go. So we then looked at mortgages. So we have been doing mortgages pre-2018, but not to any great degree. But in September 18, with the league and Link, who are now called BCM Global, we were involved in that. So we're doing mortgages since 2018, and that's going extremely well. We took the view that in order to drive up our book, mortgages was a big part of it. So we launched a variable rate, and we started at 4%. We reduced it to 3.75, and now we've reduced it to 3.25, and that's going extremely well. But there is a need, or there is a desire, really, from our point of view, to get a fixed rate. We have approval from the board, and we're working with Wellington at the moment with regard to the mortgage module, and we hope to launch 2 fixed rate mortgages in the next couple of months. We'd hope to go live in August, but the way it's going at the moment is that we are probably going to be September. The rates will be, I don't have the final figure yet. I know what they're going to be, but it's not decided yet, but it'll be 2 point something. So it will be very, very competitive with regard to what the mainstream banks will offer. And we found over the last number of months, in particular, when all the talk was that the interest rates were, we got a significant amount of inquiries for mortgages, but we didn't secure the business because they went to the mainstream banks because of the fixed rate. So we need to be in that space, and we'll have that hopefully in the next month, maybe 2 months. Our mortgage book has increased by 36% from pre-COVID figures. That is a very accurate figure, but it can be a small bit misleading, because obviously when we do mortgages, what draws down in a certain time, the whole process started months and months in advance. But it just shows, though, that we are now at a stage where mortgages are becoming a significant part of our business, and we will be looking to drive that forward, particularly looking to get the fixed rates, which will help us for mortgage retention, so we won't be losing business that we've already written, and it'll allow us to get a bigger market share of new mortgages. So that's been a huge plus to us. The stat, though, that we're starting to see is about 30% of our new mortgage members never had a loan with St. Paul's Garda Credit Union. So some of them, the vast majority of those, would have been members. Some of them were never members, but a good percentage of those would have been members. But they may have been a member because their parents were guards, or their fathers or mothers were guards, whatever, and joined them when they were kids, and there's just an account there in their name, so they were members, but they never borrowed from us. We're starting to see that every time we advertise through this eZine magazine, we get a bit of a hit with regard to people inquiring about mortgages, and the typical conversation would be, my son or daughter is looking for a mortgage, can I get them, can I send them on, can I have a chat? So it's a referral that we're getting through that from maybe a father or a mother who would have been the guard originally. So we're starting to see that that's paying dividends for us. By getting a mortgage, then, you know, it happens, and we're actually seeing it quite a lot, that the member generally then comes back to us for their home improvement and their car loan. You get a home improvement loan, and within a couple of months, because they want to do painting and tiling and all that kind of stuff, and then you have them, and then they are now a member of St. Paul's. They're a borrowed member. They've gone through the mortgage process. They were delighted with how it went. They got their house, and they're not going to come back for their holiday loan and their car loan. So it's a win-win. So the mortgage is one product, but it can lead to so much more. And we're starting to see that coming through now as well. How did we promote our mortgages? We created a separate page on our website. So when a member traditionally would have gone into our website looking to see, did we do mortgages, it was called a housing loan, and it was part of the loans page. So you go into loans and you saw every loan, from a share covered loan to a car loan to whatever. But we now separated that out. So we called it mortgages, obviously, and then we put its own page. So when a member goes on to St. Paul's, they see a kind of revolving ad for mortgages, and then they can go into the web page about mortgages, and you get all the information that they want. So it's now a case of, if they log on, they don't know or are questioning, do we do mortgages? They know we do, and they know exactly what we can do. So the next stage for us on mortgages, though, is and we are talking to Wellington with regard to the mortgage module, because we want to go live with regard to fixed rate mortgages. We see that as a huge part of our business going forward. So online loans and mortgages would be the main drivers of where we increased our business since pre-COVID. For the future, though, we're looking at current accounts. It's very topical at the moment, and we know that our Ulster Bank and KBC, there was a report out there in the last couple of weeks that about 44% of people have switched over. So there's still a significant amount of business to be done there, and that'll happen over the next number of months by the time they leave in January. So we want to share that market as well. So we set up a specialised current account switching team. So any inquiry with regard to overdrafts or with regard to current accounts or my cards or switching debits, there's a team set up for that. We have a dedicated page on the website, and that we can link that from our social media and e-sign posts. So someone goes onto our social media or goes onto the e-sign, an ad for current account, and they click a link, it brings them back into our webpage. We're opening about 80 new current accounts per month, and I think that's even gone higher now. But this has not led to an increase in our lending. I'm not going to pretend that it has, because it hasn't, because a lot of these members would have had loans with us anyway. But what we see, though, is that this is going to be important for the future. This is going to ensure that we're kind of sustainable, getting new members in who have their current accounts. If they have their current account with us from a bank side, that then that you have a great chance of getting their out of business as well with regard to car loans and so on. So when we get a member's full current account, it'll help us lending in the future, and we're looking at personal lending automation. I know people use Visualize. We're looking at that as well. Credit scoring. So it's all about getting a full picture of our member. So we see current accounts as important into the future. Not made a huge difference to us at the moment, but it's something that we're looking at. So how then do we market ourselves? I suppose, in a sense that how do we get in our new members? How do we get more business from our existing members who hadn't borrowed from us? So we did our own marketing, and we still do a lot of our own marketing, and we can change our website ourselves. But we engaged a company to help us with marketing, and in particular with regard to the social media posts. They would be very, very knowledgeable in that space, so giving us advice on it. We send out these e-sign magazines about every 2 months. Now, when I say 2 months, we might do maybe 8 or 9 a year, depending on what's coming up. And we have a different headline each time. So it can be online loans, it can be the app, it can be mortgages, whatever's topical at the time. We generally tend to keep it to 4 to 5 topics, because if we have 4 to 5 topics, you're more inclined to keep the members' attention. And it's like a kind of a news bulletin, really. We email it out to them, and we're after finding that after we send out an e-sign magazine, whatever topics are on that, we seem to get a bit of a hit then with regard to inquiries for whatever it is. It has certainly worked for mortgages. It is something that we put a lot of time and effort into, and we don't just send them out willy-nilly. That we look at the topics that we want to discuss. So whether it is a car loan, different times of the year, we'll make sure that it's kind of relevant, and it's having a big hit for us. So it's gone very well. Each e-sign item has a button, so when you log on to that topic, it brings you into our web page then for whatever it is. So if it's about a current account, it brings you into current accounts and loans and so on. We get regular feedback then from our staff with regard to what kind of questions, bearing in mind that we are all working in one building, and that we have a call centre with 14 or 15 staff, and they're getting queries and questions all day long from people about different things. And then we try and address those topics with regular updated information on our website, but also the e-sign magazine. So we try and preempt what the questions are, if we can give the answer before the questions are even asked. So it's trying to be proactive in dealing with issues and giving kind of information to our members. And the marketing then hugely was, how do we attract in the new members? How do we attract in the Gardas? What they want is new Gardas. They want online. They want technology and so on. So that's going very well. when we wanted then to see what our existing members, why we, I suppose about 30 odd percent of our, about 30% of our members are probably borrowed from us or have borrowed from us in the past, but there's a huge amount of members never borrowed from us. So we want to get a better understanding as to why. So we did a survey. So we want to know why they're not borrowing from us or they haven't borrowed from us. So we did the survey, which was sent to members who had never borrowed from St. Paul's or had not borrowed for a good number of years. So we just wanted to see, well, do they even know that what our rates are? Do they know what we can or can't do? Do they know we do mortgages and so on? So we emailed them and we got a good response from that. And the survey told us that these members didn't have a need for a loan and they didn't have loans elsewhere either. A certain number came back looking for kind of information, and we gave them that information. But we feel it's a worthwhile exercise anyway, as they know that they can borrow from us in the future. And when we get a lead from these surveys, we then put it into the CRM system on SharePoint to capture the leads, and we can go back and talk to them. It hasn't led to any significant business. We have got business from those surveys, but not any significant business. But the whole purpose is to let our members know that we want to lend to them. So we need to figure out, how do we tackle our existing non-borrowed membership, and how do we tackle our members that we need to get in, because we know that, our people who borrow money from us today, as they go on and their kids are gone through college and the mortgage is paid off and so on, their need to borrow money reduces, and we need to have a new membership coming through to kind of take up those loans going into the future. So that's what we looked at there. And then finally, we looked at our process. Everything here was going extremely well, but was manual. The information that we had on our member on the tender information on sign was limited. So when the first lockdown came in sort of April 2020, we had very little applications coming through, very few, well, certainly a significant drop in phone calls for people looking for applications. So staff were quiet. So we pulled a good number of thousand loan applications and gave them out to staff, and they updated the information on sign as best as we could. So it's all about the data. And that's a work in progress, because every time someone rings up now, we will check to see if they have their information updated, and we will update it. So we want to get our book, our information on our members as up to date as possible. So then when we come into the open banking piece and we talk about personal lending automation, which we're looking at and visualize and credit scoring and all that, our data is up to date, and that then will help our actual underwriting process. So one part is about improving our manual application process and doing it and going online and being more efficient, and then when we get the applications in, how can we approve them quicker, but still being mindful that we have to do it correctly. And so it's all about streamlining all our processes. I'm glad to report, I suppose, to state that our book now is a good bit ahead of where it was pre-COVID. So in that two and a half years, what we've put into place, would it have come back anyway? Yes, it would. But I think, given the fact that we went down the online route, that's been a huge success to us. Given the fact that we've pushed the mortgages, given the fact that we've streamlined our processes and looking for ways of getting additional business from the members, I think we've come back to where we were at pre-COVID and exceeded it in a quicker time than what we did if we hadn't done our kind of review on where we were at. And certainly, I think now, look, this from our point of view is a couple of steps along the road, but there are further improvements to be made, and it's all about being kind of sustainable into the future, but being mindful that automation is not for every member. So we have to make sure that we still deal with our members in the manner that they want us to deal with them, and that's what we did. So if there's any questions, or anything, sure, I'll see if I can answer them as best I can. Okay.
Brilliant. Thank you so much, Brian. And apologies for everyone when there was a slight delay with me sharing the presentation there, but hopefully you're able to follow, and I will share it as part of the follow-up as well as this recording. We have had a number of questions come in. Is the app a Wellington product or third party? Claire, you've answered that. The app is a Wellington product. Is there a report in Scion or a cube in CU Insight that can easily show the percentage of loans submitted online versus standard? They're saying, like, this is from Tom. He says he can pull it from account accesses in credit union CU Insight now, but he doesn't get the euro amount that way. John, that might be one for you to answer, actually, John McCandless.
Yeah, I'm just taking a look. I think we do record the application method in Scion. I'm just seeing if that's pushed through to CU Insight.
Perfect. Well, while you're doing that, there's one here for you, Brian. Do you get new, this is from Suzanne, do you get new members to sign up to the e-zine at the account opening point?
The e-zine can only be sent to members who have given consent to direct marketing. So we make sure that we have consent from the members, yes.
And then how do you get the members to sign up for the e-zine? That's from Anya.
John Ryan is on the call there. John, can you come in on that? That's your end of the.
Yeah, thanks, Brian. John Ryan here, folks. Yeah, going back a number of years ago, you recall when GDPR first came in, we had to ditch all the consents we had at that stage and start again. So we started a program back then for members' consent for marketing and so on and so forth. And we have kept that up to date since. And all new applications, new member applications in our application form are on the onboarding, the online onboarding. There is a question where members tick to consent to their marketing preference. And for the last couple of years, then we kept that database separate. We had employed a different company to look after our marketing consents. But I've now brought that back onto Sign as well. So we're keeping everything on Sign. So we hope to start encouraging staff members when they're talking to somebody, have a look and see what their consents are. And any staff member can update the consent as you're talking to a member then. As Brian said, we have to have their consent to send them the e-zine, and we only send it to people with the consent. And it's important also, once you got people's consent, you have to use it at least once in 12 months because it goes out of date. So you have to use it as well every 12 months or so. So it's a constant battle to keep it up to date.
Great. Thank you for that, John. The question here from Elizabeth, I suppose it's more really to the group. Are there any credit unions that have not gone down the digital automated route? If so, feel free to unmute your mic or maybe just put it into the chat bar. Possibly not, Elizabeth. But you can get in contact with Elizabeth. Maybe you might want to follow up with more questions on that as well. So Suzanne has asked, probably one for yourself, Brian, do you use Visualize for underwriting?
We don't at the moment. We've certainly looked at Visualize, and at the moment we're looking at PLA, which is done through Metamo. We've been given a presentation on that on Tuesday. So we're looking at that. So we will certainly go down the route of something like PLA or Visualize over the next number of months. Absolutely. So we see that as a big tool really to help us kind of get our underwriting process a bit more streamlined. So quick answers, we're not using it, but we are going to use something similar or else Visualize in the very near future.
That, Brian. So Norma has a question. Brian, your online applications, do you make a call back to those members?
In some cases you have to, for like we took the view, I suppose, that even if a member did not submit an application or did not submit documentation with an application, we've taken the view that we want that application to come through to us anyway. So we will always get the application, even if there's no supporting documents, because at worst it's a lead. And then 99.9% of them will actually follow up with giving the stuff. So, we would ring them anyway. But there may be cases that you might want to ring the member because they haven't confirmed where they want the money to be lodged to, even though it's on the CU Online that they can nominate a bank account. So you may need to ring them at times. We generally ring them out of courtesy. Anyway, just to thank them for the business, just and say, look, just confirm, look, yes, you are getting a message say your loan is approved, but just to let you know that your loan is approved and the money is going to your account number such and such, and it'll be there today or tomorrow, depending on the cutoff time. So as a matter of courtesy and a thank you, we do anyway. We ring them, but we don't really have to.
Thanks for that. So someone has asked, was it expensive to bring in a CRM system like SharePoint? And is there staff buy-in? So i.e. leads measurements, probably for Brian or John.
If I can answer the question from the cost side, I don't know is the quick answer. I wasn't involved in that, but my understanding is that it wasn't significant. It wasn't that expensive. To answer staff buy-in, it's a bit too early to say. We've had 5 new staff starting there about maybe 2 months ago. We've had a couple of lads retiring, and we have 3 more staff starting next week. So we did launch it about maybe 2 months ago, but there's been a lot happening in the meantime with regard to training up staff and so on. So we have launched it. It's not really bedded in the way we want it to be bedded in, but it works. We know we've tested it and we have used it. But when we've all our staff in play and our new staff all trained up and so on, it will become very much part of our future. We don't want to reduce the time that we spend talking to the member about a loan. And if I could give an example, say if we talk to a member about a loan for 20 minutes, and at the end of 20 minutes, he or she doesn't want to talk about takeover loans or their son or daughter joining and all, because they've been on the phone for too long. But if we can reduce, and we are reducing the time it takes us to take their application, you're down to 6, 7, 8 minutes, depending on each application. They're more inclined to talk to you then about and telling you about their son who's just got a new job or the daughter or whatever the case may be. And they're more open then to having conversations and giving you information that will lead to leads. So it is a work in progress. How much it cost, I don't know, but I know it wasn't significant. But that's a very general statement, I suppose. But the buy-in is there, but we haven't pushed it. But it is something that by end of year, really, when all our staff are trained in, absolutely, it's there for the future.
Great, thanks for that, Brian. John McCandless, can I just get back to yourself there? Did you have a chance to look at that query?
Yeah, I can see it on CU Insight. We do store the application source in Scion, but it doesn't look like it goes through to CU Insight just yet.
Yes, sorry, and if I'm coming there, when we pull our reports from Scion, yes, we can identify which loans were applied for online. They come up as web loans, as from the application being loaded by a person. So yes is the answer to that question. We can identify exactly the amount and which loans were applied for on the web.
Different, John, but thanks for that. I think that's perfect. Great. I see there's a bit of a chat going on actually with Elizabeth, so hopefully Claire and Gary are taking care of that. Teresa's saying, when you take the loan over the phone, is the conversation recorded?
Yes. The call is recorded for training verification purposes. The member is informed, and we can listen to playbacks and calls. Yes.
Elizabeth, I'm assuming is your question for Brian, or is it for the Wellington IT team? Automated lending based on your set parameters is. Sorry, I'm trying to follow the conversation.
So somebody answered me. It was Gary Bingham answered me about Visualize and told me it was end to end. So
perfect. Okay.
so is that just like is that like automated lending? Then you set the parameters and you don't. So you're not make the decision. You've set the rules. So what the decision will be.
Well, and Gary, feel free to jump in here if I'm incorrect, but my understanding is that you can do both. So you can have parameters that are already set as part of the credit unions, or you can have the official parameter set. Is that correct, Gary?
You certainly have configuration over the parameters that's sent, but it's essentially opening up your information that you have available under the core banking system to a third party to help you with that decision making. The decision comes back, and then you can then automate the loan end to end at that point.
Thanks, Gary. And then Normish just said, I do access a report in CU Insights for the online versus manual. That's good to know. Okay. Is there any more questions for Brian or John or any of the team? If so, feel free to unmute your mic or pop it into the chat bar. Don't know how fast people type it. We might be done there. We'll maybe wrap that up. Brian, thank you so much for today's presentation. It was really insightful. You know, as you say, you are an industrial credit union, but I think there's still a lot that you can learn for community credit unions as well. And I can see some people expressing their thanks in the chat as well. I will be following up with the recording of this session. I'll also include those slides, and apologies about the slight delay with sharing them. Hopefully you're still able to follow. And also, if Brian had said if anyone has any questions as well, feel free to reach out to him. But that's us for now. Thanks very much. And thank you as well, John, for joining too.
Thank you.
Thanks very much.
Bye.